Hello, Josh.
Yeah, happy Friday, Richard. This is our first meeting of the new year, man. How are you?
Happy New Year. I'm
Yeah,
good.
happy New Year.
I'm doing great.
Did you get into anything exciting, interesting over the holidays?
Not a thing.
That was kind of that's the best holiday. That's after
Yeah,
you could just
we were,
let the
you know,
dust
we got
settle.
whatever's been going around the country for over kind of after Thanksgiving, took a few
Mm,
weeks, and Christmas was kind of like catch up, catch your breath, have Christmas, get some rest, and get ready for the new year. So that,
everybody in good
that
health
was great.
now.
Yeah, we're
Awesome.
we're through it and having a good year.
Yeah, good to hear, man. I as a sales guy, the end of the year turns into just
Right.
chaos for us.
Yep.
And then you hit December 31st, Jan 1 looks, you refresh your screen and it just goes back to zero. You got $0 closed. And it's so overwhelming, man. So I'm dealing with my own mental hurdles at the moment, but I get through it every year. Um, I didn't book this for therapy though. I'll have a separate call on your calendar for that.
All right.
Um, there's been lots of stuff that's taken place over the last handful of weeks, man. Here in the new year, I've been excited to chat with you. First, I'll ask you just about the newsletter you shared earlier this week. Let me share this. Um, how to set better money goals in 2023. This was from Dr. Barton, and I wanted to share this. I mean, obviously, we're here in the new year. He calls out this study where almost 50% of Americans make New Year resolutions. Right about the same time, obviously, just because we're at the top of the year, Charter released this graph, which I thought was really interesting. Just shows the different sort of age brackets and then where their New Year's resolutions falls based on that. And
Hmm.
so some of
That's
things of like
interesting.
really interesting of saving money and how different that is from 18 years old to 65 or improving mental health happiness I thought was an interesting one.
So the
uh,
left side is less important and the right side is more important.
exactly.
Okay.
And my what I wanted to get into, what I was
Go
hoping
back
to
to that
ask.
for just a second. I want to look at that one more
Of
second
course.
because there's no purple dots to the right of green dots. All the green dots are on the right. So goal
Hmm.
setting, New Year's resolutions are much more important to 18 to 29-year-olds than they are to 65-year-olds. Am I reading
That's
that right?
right. That, yeah,
That's
you are.
interesting.
My ask, I guess coming into this was,
Yeah.
does Dr. Richard Smith set New Year's resolutions? And if so, I mean, I'm sure there's probably a couple that you want to tuck in your wallet and not share with anybody, and you have big goals. But is there any that you'd be willing to share with us?
Yeah, but before I get into that, let me just give a shout out to Dr. Barton for writing that article. And I don't think people really know who Dr. is, but we're so fortunate to have him at Finiac. He has been an educator in this space for decades. He's a fantastic communicator. He knows his stuff and he really gets what we're trying to do at Finiac, which is, help people to, I say that investing is a three-legged stool. You got to have good, right? You got to have good ideas, good information, good history. You got to know what you're doing or follow somebody who knows what they're doing.
Hmm.
The second leg of the stool is that you have to have diversification or uncorrelated investments. And the third leg of the stool is you got to have good habits. You got to have, I call it the U. So I say the three legs of successful investing stool are good, uncorrelated, and U, right?
Hmm.
So Dr. has so much experience in this realm of uncorrelated and U. And I think it really shines through in that article, which is just a little taste of the things to come. He worked with Dan Tharp, who's a legend in the risk management space, taught, hundreds or thousands of people sitting in classrooms, working with them through the process of not just like, hey, what's a good tip, but no, how do I become a successful investor or trader? It's a process, and it's about way more than, what's happening on Wall Street bets today or, what's the latest thing that the media wants me to focus on. So we're just very lucky to have him.
Mm.
And I thought that was a great, great article, and something that if anybody's going to really improve their outcomes this year, read that instead of looking for the next hot tip. So in terms of myself, I would say I'm more process oriented than results oriented at this point. Maybe that's part of that, as you get older, you're sort of not as specific in your goals. I don't know. There's a little sign on a church that is on my drive home that says daily devotionals are more important than New Year's resolutions. And I think that's true. I think it's really about how we conduct ourselves day to day. But that being said, definitely the new year is, you can't help but focus on the year behind and the year ahead. And I didn't really set like a set of New Year's resolutions this year, but I definitely did have some resolutions. A big one for me is being in the black this year. I've invested a lot over the last few years in basically a startup business, and I'm really proud of where we're at and what we've accomplished. But it's time to get in the black. So
yeah, it's go time.
It's go time. So that's an example of a resolution for this year.
Yeah, I think that's great. And we'll make sure that this article is linked in the show notes. To your point, I think it's really well written. He does a great job at showing the differences between result oriented versus process oriented, and how really you don't want to sit on either end of the spectrum, but you want to have this fluid blend of both. And it does it really. I thought it was fantastic. So we'll make sure that that's linked in the show notes.
And if people aren't on the Finiac email list, you got to get on it, because when DR writes something, you got to read it.
Usually we start our meetings with my little temperature check, and I feel like I have to do that here at the beginning of the year. It's been an interesting time, and let me just rattle off some numbers, because I feel like we're kind of being pulled in two directions, and then I'll get your first take of the year. The first, layoffs have continued, and you'll find, a lot of these are from the tech industry. I read this morning, Google plans to lay off about 12,000 employees. Microsoft CEO confirmed earlier this week they're going to lay off 5% of their workforce by Q3. That's 10,000 employees. Coinbase, 20%. It's 5,000 employees. Amazon earlier this month, 18,000 employees. So pretty big swings there. On the other side, for the first, I haven't said this in probably a year, the S&P year to date is up 1.95%. And then I'll show this just to flex the other side of the muscle. And here, this is showing CPI, and that CPI fell 0.1% in December. I guess I'm just doing a general temperature check here, man. With us being 20 days into the month, how are you feeling?
Well, we just did a big event with the Foundation for the Study of Cycles, where it wasn't just me, it was me, but also Larry Williams, Jake Bernstein, Bill Cerubi, Lars von Tienen. And I have to say, the cycles overall are bullish for the year, and really the most important cycle, and one of the big things that impressed me with listening to all the speakers, was the consistency that the cycles are bullish in the stock market for 2023. My personal belief is still that there's more shakeout to come. I still lean my beliefs are still bearish, even though the cycles are bullish. I try to look at the fundamentals, which some of my cycles friends don't look at them at all. It's like, no, the cycles lead the markets, not the fundamentals. And I think there is some truth to that. So I came away from the summit a little more optimistic than I went into it. The cycles, we called the top in the market back in like November of 21. And that same cycle has always been down until about the middle of 2023, but then it turns up. Now, on a cycle that long, usually there's like a 10% window. So let's say that's about a 2-year cycle. I mean, from the peak to the bottom. So give or take a couple of months, we could see the cycle bottom in the spring or even through to the fall somewhere. So, but it was impressive to see that this one cycle, which is like a 41, 42-month cycle in the stock market, has been consistent, for almost the entire history of the stock market. Was first identified, back in the early 1900s, and certainly confirmed by Dewey and the Foundation for the Study of Cycles, and it persists today. So it is something that people need to know about. And, cycles can get overwhelmed by central banks, but at least temporarily. And, but overall, I came away a little more optimistic.
You're making me smile. Let me just ask, let's see, this is from January 10th to 12th. The cycle that you're discussing there, was that covered throughout the entire 3-day event, or was that a specific person you could shout out?
It was mentioned by multiple people, particularly Larry Williams, who, people don't know Larry Williams. He's been at this for 60 years, and he's got a website, ireallytrade.com. He's a legend, I mean, he's the real deal. And he made a big deal about it. And then I went after Larry, and I had almost the same chart. I can actually show you that chart if you'd like.
Oh, that'd be awesome. Please.
Let's see here. Yeah, here it is. So this is, 3.5 year, 183 weeks was the cycle that our system found, our technology. And if you just look at, this isn't going back to the 1900s, right? But bottoming in 2008, bottoming in, late 12, bottoming in 16, bottoming in 20, topping around November 21. Bottoms tend to be more reliable than tops, but this is a powerful cycle. And if you had bought the bottom and sold the top each time, right, you'd have done pretty darn well. So, and this cycle bottoms around June of 23, according to this model. Like I said, it can be 2 months, either side of that. So it can be like a 4-month window. And this is not something that you just take and go, okay, I'm going to go buy the market in June of 23, and I'm going to stay out until then. You can't do it that way, but it is information that people should know about. And it really has been as reliable as anything I've ever come across in the markets, period. As long as I'm here, the one other chart I would show you from my presentation is this one. I got this data from Global Financial Data. They specialize in kind of deep quality, long-term historical data. So this is 10-year yields, interest rates, right, or yields on the 10-year Treasury note, going back to the Civil War. So this is 1787 back here, okay? And, we hit in the Civil War, sorry, not the Civil War, the Constitutional Congress, right? This is the beginning of the Republic. Hit 24%, down to about 3%, up in this is what is, so this is a 86 year cycle. About 6% down, 2% up. In 1983 at like 16%, and then down, right? And this was really unprecedented down here. I mean, the average over the whole history of the United States has been about 4.8%. Okay, that's this kind of red dashed line here. Going to 0 or 1% on Treasury notes was totally unprecedented. So I continue to think we're in an environment where money is going to continue to get more expensive. Interest rates are going up. This is going to take a long time. Talk about a 10% window. It's like, 8 years on either side of the bottom. That's a 16-year window. Okay. So like, don't go out and trade this tomorrow and think that you've got the holy grail. But I do think this is still the biggest trend that's in play, which is the, gradual rising of interest rates over the next 20, 30, 40 years.
Mm. This
That's some of the
graphic,
stuff that's still, and that's actually at odds with stocks going up, right? Because as interest rates go up, you can earn a safer return. Everybody's not forced into the stock market like we were when interest rates were so low that we couldn't get any return. So there's decent returns out there now. So, on the short term, I still think there's some overall bullishness this year. Longer term, I think there's a reckoning that we don't really fully appreciate yet.
there is some silver lining in that. I'm excited about that answer, man. The graphic plus, I mean, obviously you've been in this, doing this, studying this a long time. The graphic plus you and the team's sponsorship of this FSC, that's powerful stuff, man. The first graphic, I started getting chill bumps. Yeah, that's really cool.
I've been a part of a lot of online and in-person forums. They cost thousands of dollars, and that was an all-star lineup that was worth thousands of dollars, and I think people paid $99 or something to become a member. So to be able to deliver that level of content a couple times a year and have access to the tools that the foundation offers is pretty crazy.
Yeah. That's the other thing. And I had this highlighted in my notes, is to make sure I had this hyperlinked in the show notes. So I'll make sure that that's there as well. While if you missed the live replay, or if you missed the live event, you can go back and check out the replay. So I'll make sure that we get that checked out.
Yeah.
We don't have to spend much time here, but this was chaos. And me as a software guy and as someone that works through developing and building software, this was, I mean, my jaw was just on the floor as this thing started to shake out.
Yeah, that was incredible.
Southwest, they pointed at their crew scheduling system for this issue, and I've gone down many rabbit holes reading this now, but this whole issue here of canceling, they had more than 17,000 flights canceled in December. It costed them more than $800 million. 400 million of that was for customer refunds, and then they had to go back and comp the out-of-pocket expenses for these customers that had to get emergency hotels and Ubers and eat and things like that. They gifted each of these flyers 25,000 frequent flyer points. They had to pay their employees, their captains, the flight attendants. I saw this picture down here that I thought was crazy. All this luggage that had just been stored, and it was just it's insane. If you don't have an air tag somewhere in there, you're done for. I don't, the stock dropped, Southwest stock dropped 8 to 10% since December 21st. I don't think I just maybe had a, how do you feel about this, man? Do you have any perspective? This was insane.
Yeah, I think they got what they deserved, Southwest. And I think they really prioritized profits over service. And they didn't make the investments that they should have made as they, sought to minimize costs in a way that came back to bite them. So really no sympathy. It's going to be interesting to see how it kind of shakes out in the public's perception. I think it's going to be years for them to recover. And I think this is a really damaging event. I think they betrayed the trust of their customers in a deep way that wasn't just, it was really the result of years of neglect and of screwed up priorities. And I think there's a lot of that going around. And it's part of the reckoning that I think we'll see more Southwests before all is said and done.
Yeah. I remember seeing this post by Sahil, the CEO of Bravado. He said 20 to 30% of startups will fail this year just due to like the economy and them cutting corners like that. I think you hit it right on the head, man. Like I've been in the SaaS space, this software as a service space for 7-8 years now. And I've seen huge breaches and events from a cybersecurity perspective, but no patching, software updates, secure this is a software failure, and that's it's just poor maintenance. Like to your point, that their priorities were really jacked, and at some point it's come bite you, and they got it. And
I mean, the
yeah, no,
CEO said, the buck stops here, which is nice, but I mean, if I were him, I'd step down. I mean,
yeah,
that was a brutal buck.
yeah, yeah, it was, yeah. Give me so I have to. I brought another question that this is less finance related, and it's me scratching my own itch. But with your message at the beginning, when I asked how the market's doing, and you talked about this three-legged stool, now this kind of works into the messaging a little bit better. You talked about the you, and one of the things that I obsess over, like in my own personal life, is this idea of like every morning when you wake up, you start your day with 100% brain capacity, full of energy, full of excitement. You can focus on something like you're 100%, right? Most days. And then as you make decisions and you have conversations and you, whatever you're doing, you're slowly picking away at that 100% and you end the day at 0. If you punched into Google today, how many decisions does an adult have to make in a day? I'll show you what I got. You find thousands and thousands and thousands of data points that point to something like this. And it'll say you make somewhere around 35,000 remotely conscious decisions each day.
Yeah, go back to that picture for a minute, because that really says it all about our American culture, right?
Yeah.
I mean, you look at all those products and the vast majority of them are identical. You have
100%.
like 3 choices for a salad dressing. But look at that.
Yeah.
This is how our consumer society works. It's like all these false choices being put at eye level in front of us day after day, minute after minute, blink after blink. It literally drives you insane.
Totally.
And exhausts your decision-making capacity.
Yeah. I can't remember what I called it on my podcast, but I had this attention expert, Maura Neville Thomas, come on, and I called it like brain juices or brain bandwidth or whatever it was. You start the day at 100, then you see stuff like this throughout the day, you end at 0. The first time I saw this topic was actually with Tim Ferriss, and this is from 2020. He wrote this blog post, finding one decision that removes 100 decisions. And then I read it again recently in a newsletter that came to me this week. To sort of get you my question, you start the day and you're forced with all these decisions. What do I wear? What do I eat? How do I handle stimuli or conflict at work? What questions am I going to ask in this interview? Do I invest today? And what do I invest in? I mean, it's just so much, all the things in between that. How do you combat decision fatigue? And the one that I've highlighted is look for the single decisions that remove hundreds or thousands of decisions. And I'm curious if you have, if as I'm talking through this, anything in your life or in your operation comes to mind.
I mean, I would say that is what Finiac is about, right? So if you are an investor, you're being assaulted with 1,000 decisions that the media or somebody who's trying to sell you a newsletter or whatever is throwing at you every minute of every day. How do you decide, right? So this is like, well, you got to build a portfolio of diversified investments. So rather than, looking at investing as this series of 1,000 different decisions about should you buy this investment or not, right?
Yep.
It's like, no, use some tools to help make one decision that's mathematically sound, right? That then allows you to then ignore the 1,000 decisions that are being placed in front of you every day that are really false decisions. Again, it's about like the media, our consumer society. It's all about overwhelming us with decisions that we really don't need to make. You can buy olive oil and balsamic vinegar. You don't need 1,000 choices of salad dressings. You don't need 1,000 choices of potential investments. You have to cut through the noise. And I think there's a lot of ways to do that. And one of the ways is, 15 to 20 good uncorrelated return streams. And how do you find them? You can use tools.
Embarrassingly, as I wrote that question and got there, I didn't even make the correlation that you're spot on. I mean,
yeah.
That's literally what we talk about on a week in, week out basis, is the amount of noise and stuff and that we're being thrown at from just an investment perspective. And then it's insane.
You cannot make any intelligent decisions if you are taking in all of the assault that comes at us every day.
That's so good.
And if you are listening, if you're really in the markets and you have to be paying attention to, you have to listen to it kind of almost abstractly, like not listening to the words, but listening for the tones, listening for the emotions, listening for the messages within the messages, then you can kind of fade those messages, if you're more of a speculator or a trader. But listening to the 1,000 things that are on CNBC or Bloomberg every day, it makes no sense. It's nonsense,
Yeah.
Yeah. And the brain is the, hungriest part of the body, right? It burns the most calories. And absolutely decision fatigue, I wear these mock turtlenecks every day.
That's right. Yeah, limited color palette, black, red, white. That's all I have. Yeah.
Yeah, every decision you don't have to make.
Yeah, that's great, man. I jotted down a couple, obviously not as well thought out as that answer, so now I'm embarrassed. But obviously I lay out my clothes every single night to make sure in the morning I don't have to start the day off trying to figure out what I'm going to pick. I meal prep every Sunday. My grocery cart is pre-saved where I buy the exact same thing. I come home, I meal prep the exact same stuff. I do Brazilian Jiu-Jitsu every morning, so I don't have to worry about when do I exercise? How do I fit that in my schedule? What am I going to do? It's just boom, boom. There are things that you can get implemented on that routine type setup and not even worry about it, man.
Yeah, I mean, every time you participate in the media's or the consumer society's decisions that they're putting in front of you that you don't need to make, you're literally like giving your life away to them.
Yeah. Yeah.
So
speaking of giving your life away, I'm looking at my time. I've got 2 more questions, and the first one, or this next one, I can't let you go without asking it.
right.
The last time that we met, I showed you this graphic on ChatGPT, and let me just pull it back up for those that didn't join us in the last session. I just talked about the adoption rate of the technology versus some of the other, more popular platforms. Since then, this thing has not slowed down. It continues to accelerate. There have been platforms that have built on top of ChatGPT just to beautify their user interface. There have been other platforms that are helping niche this thing down into different industries, get into real estate, get into nursing, get into marketing and help write emails for sales, all these different verticals that they're starting to get niched into. I'm sure you've seen or heard this piece. Microsoft has been getting involved to date. They've got about $3 million wrapped up in OpenAI. There have been whispers that have been gaining lots of steam that here in the coming weeks, they're going to invest about 10 million bucks in the org. With that, they're going to own 49% of the organization. It would then drop to, or I'm sorry, it would start at 75. And once they recoup their investment, it would drop to 45, 49%. They're trying to integrate this thing into Bing is the end goal, right? And like, they're going to start to compete with Google trying to make money off ads. This is not their revenue model. They would get you straight to the point. What I'm getting to is I can't tell if I'm excited about this acceleration and this momentum, or if I am scared of this acceleration, this momentum this thing is getting. You have any feedback? By the way, this is the co-founder. He
Mhm.
posted this on Twitter. This is the last day of the year. The co-founder and president prediction: 2023 will make 2022 look like a sleepy year for AI advancement and adoption. You have thoughts, feedback?
Um, it's cool.
It's so cool, man.
It's definitely in advance. We've been using it a bit, and our experience has been that it gets you, like 80% of what you need. But man, watch out for that 20% that it gets wrong.
Mm.
And so again, I really think that the solution, the ultimate solution, is in a hybrid understanding of intelligence, that it's our intelligence supported by machine intelligence, and ChatGPT is machine intelligence, which is machine intelligence modeling our intelligence by all of the things that humans have put on the internet, right? All that it's processed, that it's making those decisions from, came from humans. Okay. And so it's modeling human intelligence, and it can get, further in that quest than than Google is doing. I was on Google this morning. I mean, I was looking for something, and it's so amazing how much, the results that you get on Google are, it's hard to find anything beyond kind of the surface,
For sure.
So it's colored by the algorithms and the incentives on Google, right? So anyway, it's going to be fascinating to see how ChatGPT plays out. Fascinating to see what it's, how they're going to make money, what their business model is, and how that influences the results. So you look back on Google, and when they decided to monetize their technology through advertising, what that did to their technology and how it shaped its future, right? And I think we see the outcome of that today, which is it's really a platform primarily for the advertisers. And look, Finiac, we're right now trying to compete on Google, and I know how it works. I know how it's done. And it's, we're trying to get good information and good content to people, but still, we're trying to game its algorithms, right? So that people will find Finiac. And that's how it works, So anyway, the technology is amazing. It's impressive, and it is an advance. It's still subject to all the same problems that technology is subject to. And, those are problems that have been with us since recorded history.
Two things. One, I want to make sure that my lips and mumbling that I said the right thing. It's billion, not million. Microsoft doing billion. So 3 billion so far, up to 10 billion. And then let me show you this, just because I thought this was funny. This morning I was struggling to get into the platform to chat GPT. Just because their servers were down. But about 10 minutes before this, I was able to get in. And so I wrote this just for anybody that hasn't seen it. I thought this was cool. I told the machine, you're an expert interviewer in the financial industry, preparing to meet with an investing expert. What are the most important and relevant questions that you would ask in your 15-minute interview with him? And these questions popped out, and I got about 7 or 8 in. And what I thought was funny is all of these could be answered with your app. And you didn't know I was going to bring this up. You didn't know I was going to say this. I just thought that was a cool little correlation, man. So you don't even have to answer any of these, but I thought this was the machine gave me, and you have an answer. So that was slick.
Right, man. How do you manage risk in your portfolio? Number 4.
Yeah, exactly.
I like it. See what I mean? It's in advance.
Yeah. Yeah. This thing knows what it's doing. Yeah.
You go search investing on Google, and you're not going to get this.
That's exactly right.
Very cool.
Last thing.
Give me that list.
I definitely will. I'll screenshot it and send it to you.
Cool.
My last thing for you, man. I really enjoyed this. It's at the very beginning of the year, and we talked about New Year resolutions. Yeah, this is fantastic. You talked about New Year resolutions. Personally, at the top, I wanted to close with just a sort of forecasting or future thinking about Finiac. Here in this newsletter, you give us a 3-month roadmap. You talk about some cool stuff. This new correlation calculator. You talk about the discovery engine 3 months out. I just wanted to pull this up and see if there's anything that you're particularly excited about or wanted to call out. Just anything you wanted to share with us.
What I'm excited about is I feel like that we've really honed in on a methodology that I believe is relevant, whether you're a day trader or a 30-year, 401k investor. Mm. And so 2023, is that where we're in, 2023?
I know. let me ask ChatGPT.
Is really about kind of how to package that experience into a design, a language, a way that it can be more accessible to more people. Mm-hmm. So we've been doing tons of user research. All your leverage in design is at the beginning. Once you start building, you're kind of setting things in, maybe not in stone, but you're definitely doing things that you might have to someday undo, right?
Yeah.
So excited about where we're at, excited about the feedback we've been getting, and we're really working hard to present it now in a way that people can understand it better, interact with it better, and we can continue to incrementally improve and then, ultimately scale. So that's
go
the big
time.
idea.
Yeah, man.
And we need to raise some money in 2023 too. So hasn't been a good environment for raising money for a little while here now.
Sure.
Hopefully the cycles will turn up and people will be more interested in investing again, a little more relaxed.
Come on, Q3. Yeah. Richard, I know I'm up on my time, man. I appreciate you giving me a few minutes. And as always, man, this is my favorite conversation of the week, man. I appreciate it.
Always great to talk with you, Josh. Thanks for all the great questions, and look forward to talking again soon.
Yes, sir. Cheers.
Bye.